Right now you're showing your MetaStock screen. Is that good?
Yeah, that's fine.
All right, we're going live now. Click and go.
Okay. Hey everybody, Jeff Gibby here. Welcome to the MetaStock room, our very first YouTube live. So welcome. If you've joined us in YouTube or if you've joined us in the GoToWebinar, you should be able to see everything just fine. Welcome. Greetings. Good to see you. Thomas asked a question already. So he's like, how is Rahul and his father? They're doing very well. Actually, we just got back from a long Asia tour. We went down to Singapore and we visited with Rahul and Dheeraj, and they're both doing very well. I absolutely love those guys. It was really good to spend the better part of a week traveling around Asia doing a MetaStock tour with them. In any case, want to welcome you to the class today. It's good to see you. Let's go ahead and get to the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So, as I said, welcome. It's really good to have you here today. I wanted, in case you're not familiar with me, my name is Jeff Gibby. I've been working here at MetaStock for, in about 11 days, 22 years. So there's a few things I'll say about that. Number one, it's a great company to work for. We've got a great person that runs our marketing team. He's in here in the room. That's why I said that. We also have just a great team. We have everything we do here out of our home office in Salt Lake City, Utah, and our support is all done right here. We have more people in support than we have in sales and marketing put together, but it's a very tight-knit community. We absolutely, it's been a very rewarding place to work. So to tell you a little bit about the company real quick, in case you're not familiar with it, it's a company that's been in business since 1982. We were owned by Reuters. Reuters then changed to Thomson Reuters, and now it's Refinitiv. We actually purchased ourselves back in 2013, so we're going on 6 years now that we've been an independent company again, and it's just a great place to work. I absolutely love it. Love to talk about the software and love to show people the software. One of the things I like to just tell people, particularly about the software, is for every single year for the last 25 years, it's actually been voted #1 by the readers of Stocks and Commodities magazine. So with MetaStock, there's a lot of things that you can do. You can scan the market and find the best trades to take right now. You can test your trading ideas, see what's actually performing best on the issues that you're interested in. We've got a patent pending forecaster that allows you to go in and kind of see what likely price movements are. And of course, you have the ability to get real-time alerts and commentary and signals. And it's a great program. There's a reason it's been rated #1 every year for the last 25 years in a row. So in any case, today, though, what I really want to talk about, Salam, good to have you here. Greetings, our first YouTube comment ever on a live video. So anyway, so today what I'm going to talk about, though, is one of my favorite systems in MetaStock. It's called the RMO method, or the RMO model. There's a few reasons. I'm going to go into a little bit of a detail why I like to show these, but let's just say it's the first, for now, let's just say it's the first model I ever started trading real money with. And I've shown it probably hundreds and hundreds of times all over the planet. It is a trend following model. So if you've heard like the phrase, the trend is your friend, befriend the trend, a rising tide lifts all boats, I'm sure none of you have ever heard any of those phrases, but the idea here is to kind of not get into the exact bottom and in the exact top, but to take good sizable chunks from a good trend. And it's a simple 3-step process. Where it comes from is actually a guy by the name of Rahul Mohinder. Okay, and Rahul, like I said a little bit earlier, we just got back from an Asian tour. We visited Singapore and Shanghai and Hong Kong and Jakarta Bangladesh, you name it. Rahul, to kind of just give you the history of Rahul, he has been with the company longer than I've been an employee. I think he's been a dealer of MetaStock for 23 years now. And he's such a great person. So about 10 or 15 years ago, he was in the office. To give you an idea of the background of his company, he teaches people how to trade in India. He's one of our most successful dealers. There's been many years where he's actually sold more MetaStock in India than we have here in America. So obviously we love the guy, right? But he was in the office about 10 or 15 years ago. We had him show us one of the models that he uses and that he teaches people in India how to use. We really, really liked the methodology, and we basically bought it from him, and we've been including it in MetaStock for free ever since. So Dan says, I'm impressed by MetaStock Pro. I want it. Okay, good. Well, welcome to the class today. In any case, there's a few reasons I like to show this as an introductory class. You know, we could, and we do, we could spend a lot of time walking you through the power tools, and that's a really good class as well. We could show you how to do system testing. Could show you how to do scanning. But one of the things is I'm going to show you how to get like an extended trial with a lot of training today. What I want you to be able to do is have a knowledge of this really good system that's packaged into MetaStock, that's easy to use. It's objective, so you're not trying to make decisions based on like what the news is or the latest Trump tweet or whatever it might be. If you use it correctly, and if I show you how to use it correctly, you'll use it with solid money management. And again, I've shown this in probably, I don't know, 50 or 60 different countries on a lot of different instruments. And it really is a simple three-step process that you can use to kind of follow and identify and trade with the trend. So that's why I like to show it. What we're going to do today is what I always do. We're going to look at some stocks. So if you're on YouTube now, or if you're in GoToWebinar and you have some stocks that we'd like me to look at, let's go ahead and have you type in the symbols, and let's go ahead and kind of open them up. And the first thing that we're going to do when we do that is we're going to identify the primary trend. So go ahead and type in your symbols. I'm going to go ahead and we're going to look at the ones that you want to look at. So I'm waiting for you. And while we're doing that, I'll just go ahead and swap over into the MetaStock program. So you should be able to see the Dow Industrial Average. Looks like we have another bit of a down day. And I'm just waiting for a few symbols. So go ahead. Don't be bashful. We have plenty of people in the GoToWebinar room. We have plenty of people on the YouTube Live. If you've got some symbols, go ahead and give them to me. And, okay. Pratish says CC. Matthew says when. Okay. Let's go ahead and get some of these opened. Okay, and so for those of you that have MetaStock, to get to these models, I'm going to go ahead and open up the Power Console, and we're going to go ahead and type in a few instruments here. So we'll just go ahead and type in WYNN, and because we use the Refinitiv data, or what used to be Thomson Reuters, I'm going to follow that with a .o, which just tells basically to grab all of the data, whether it comes through the exchange or is electronic. I'm going to go ahead and grab that. We're also going to look at CC and Starbucks. Okay. And let's see. Oh, I have to type it in right, though. And then Apple. Okay. That should be enough. We'll go ahead and go with those four. Okay. Now what I'm going to do from this Power Console is I'm going to go ahead and apply the RMO trade rules. So right here, we're going to look at a daily charts today. You can apply this to any time frame that you want, but we'll go ahead and do daily to keep things kind of easy. And what I'm going to do is I'm going to go ahead and apply it under this apply template. What I want to do is I want to load in those RMO rules. So what I'm going to do is I'm going to choose the RMO trade model right here. And we'll just go ahead and open up the charts. I've got the four symbols that we're going to open up. We'll just go ahead and click on the open chart. It'll go grab the data for us. It looks like I did mess up on the symbol for Starbucks. That was my fault. I'm going to go ahead and cancel that request just to keep things kind of moving. So let's go ahead and look at these charts in a bit of a tiled view. So here we've got CC, we've got Apple, we've got Wynn Resorts right here. And I think for the and then we've got, of course, the Dow, which is the chart that we were looking at initially. So let's go ahead and kind of drill into the Apple chart. I'm going to go ahead and kind of look at that. I'll explain the rules, and then we'll look at the Apple chart to start. And depending on how much time we have, we'll kind of go through some of the trades on the other charts as well. Okay. So the first thing is, if we want to be able to trade with the trend, what we want to be able to do is identify it, right? So when I start to talk about trends in context with like the Rahul Mohinder or the RMO templates, we're really going to be dealing with 3 different types of trends. So we'll have what we call primary, and you can think of primary interchangeable as a long-term trend. So it's going to be looking at a lot of data. We'll be looking at the intermediate term trend, which is going to be less data, and then we'll also be looking at the short-term trend. Okay, so let's go ahead and start. The first thing that we want to do is we want to identify what the primary or prevailing or long-term trend is. Okay, and with RMO, that's very, very easy to do. What we're going to do is we're going to look at this indicator right here at the top. I'm going to make it full screen. It's called the Rahul Mohinder oscillator, or the RMO for short. Okay, and this is a primary trend indicator. So the way you read it is very, very simple. Rahul's designed this for simplicity and with simplicity in mind. But basically, we're going to take a look at this indicator. We're going to look at it, and recently we're going to say that this indicator is above 0. Okay, so it's been below 0 here up until about, well, exactly February 4th. And since February 4th, it's been above 0. Okay, if it's above 0, then from a long-term perspective, the RMO is in a bullish state. Okay, in other words, the stock is trending up. We're reading a bullish reading long-term. Okay, and what does that mean for us as traders? Well, it's very simple. If we want to trade with the trend, we don't want to take shorts. What we're going to be looking to do is go long. So from a rule base, basically, as long as your RMO is bullish, or if it's above 0, then we'll only be looking to go long on a security. We won't be looking to take short positions on a security. Okay. If we look back here in this November, December to February region, it was below 0, and you just reverse the rules in that case. So as long as it's below 0, what you'll be looking to do is you'll be looking to take short positions only, and you're not permissioned to go long. Okay. Now I want to be really, really specific right here. Just because it goes from below 0 to above 0, that's not a signal to get into the market. There's 2 other things that we're going to look at. We're going to look at the short-term trend and the intermediate-term trend. But basically, this is a permission system. If I was looking at Apple today, looking to take a position, I'd know just at a glance right now that I'm only allowed to go long, and I'm not allowed to go short. Okay? All right. The other thing that I like to point out, I'm going to go ahead and move this back into the chart here, is down here at the bottom, you can look at the indicator. When it pops up above 0, you'll see that the RMO pops into this bullish phase. Okay? If it's down below 0, like it was in that November through February phase, then it's going to say that the RMO is bearish. It just happens right there on the chart. Very, very easy to see. We do have a complaint that we're not seeing the screen on GoToWebinar. I can fix that. Okay. All right. Sorry about that, Anton. You should be able to see the monitor now. Okay. So in any case, sorry about that. So here we've got either just to kind of recap for those people that are on GoToWebinar, this is the indicator we're talking about. If it's above 0, you're bullish. If it's below 0, you're bearish long term. Okay, and this is the ribbon I was talking about. As long as if it's down below 0, you're going to see that it says RMO bearish here, RMO bullish here. So right now, so far, looking at just when it went bullish in February, the stock has gone up from maybe about 163 to about 187. So it's actually rising in price. Those are the opportunities. That's when we want to be looking to go long and not short. If we look at where this kind of dropped off and started to go bearish, it was a pretty steep dive. And so even just like by using this rule alone, if we're looking only to go short during this big dive down that happened right here, well, not taking long positions but at that point is actually going to be very, very helpful, I would argue, and not looking to try and buy along until we see a good trend. So that's step number one. Basically, what we're looking to do is identify that primary or prevailing trend. And that's very, very simply, it's that simple. It's that easy. Okay. And again, to just kind of recap that rule, if your RMO is bullish, you're allowed to buy. You're not allowed to short. It's not a trigger. If it's bearish, you're not allowed to short. If it's bearish, you're not allowed to go long. You can only go short. And again, it's not a trigger, so you don't get in just because of that. Okay. I believe that I have solved the issues with the monitor playback. So if you can not see it, still let me know. Okay. All right. The second thing that we want to do when we're looking at this is we want to identify the short-term trend. So from the short-term trend, what we want to be able to do is, now we've looked at the long-term trend. In the case of Apple, we're allowed to take long positions. What we want to do is we want to be able to confirm that with the short-term trend. And so let me show you how that works. I'm going to go ahead and go back to my MetaStock chart right here. And initially we were looking at the RMO, or the primary trend. What we're going to do now is we're going to look at the short-term trend. Okay, and to do that, I'm just going to kind of focus in on this swing trade number 2 and the swing trade number 3. Okay, so I'm going to go ahead and make this full screen. I do prefer a slightly different view, and with MetaStock, that's actually really easy to do. If I double-click on an indicator here, I'm going to go ahead and change this from a histogram to a line. Okay, so now we've got a little bit of a blue line. This makes it easier for me to see the crossovers. I actually happen to prefer this as a view. And that's the thing about MetaStock, is if there's anything that you want to change, if it's already on your chart, you just double click on it and it'll give you the properties dialog box and you can change it that way. The indicator that we're going to kind of focus in on, though, is not the blue line. What we want to be able to see is kind of this, this pink, or this pinkish purple line that's right here on the chart. And you'll notice, if we wanted to compare it to the longer term trend right here, you'll notice that it's a lot more reactive to market trend. Okay, it looks very, very similar, but you'll notice that it's a lot more volatile because it's looking at a shorter term time frame. So that's why we're looking at kind of the shorter term trend. This is going to be a lot more receptive to price action. We want this to also be in a bullish phase, and we read it the same way. So if we're looking at the purple line right now, it's above 0. It's been above 0, and it's been in that bullish phase since about January 30th, and we read it the same way. So if I'm looking at the swing trade 2, what I can say is, like, right now it's bullish. So my short-term trend is bullish. My long-term trend, which we looked at earlier, is also bullish, and I'm still allowed to buy this security. Okay, this is another filter. So if we're looking at a stock and long-term it was bullish and short-term it's bearish, we're not going to trade, because we want to have all of the trends in our favor. We want just that additional confirmation that things are going to move in our favor if we get into this trade. So we want to make sure that we're trading in the direction of not only the short-term trend, but also the long-term trend. And that's how we use it. So it's as a second filter. If we're looking at Apple today, which is the day we'd have to look at Apple, right? We could say, okay, our long-term trend is bullish, our short-term trend is bullish, and we're still allowed to buy. Okay, and it's that simple. The other thing is, with MetaStock and the way we've kind of integrated this into the software, we also give you another visual clue when that happens. So with the long-term trend, we had the ribbon down here. You'll notice when the short-term trend pops up above 0, what's going to happen is all of your bars are going to be started to be painted blue. That's it. So if we're kind of looking at it here, we've got a blue bar. Okay, that means our short-term trend is bullish. We've got a green ribbon. That means our long-term trend is bullish. So you can look at the indicators if you want, or you can just look at the kind of the colors on the screen. Okay. Now what I'm going to do here, let's just go ahead and kind of revisit those rules real quick. If the primary trend is bullish and the short-term trend is bullish, we're allowed to buy. We're not allowed to short. And again, it's not a trigger to get into the market. Mudalya Ravinash, welcome to the class today. I hope you're enjoying it. Okay. All right. And again, if the primary term trend and the short-term trend don't match, you're allowed to wait for opportunities. So in any case. Now what we want to do is we want to talk about how we get signals. Thomas asked a question about the intermediate term trend indicator, and if there is one, and we're actually going to cover that a little bit right now. So it's a great question, Thomas. So let's go ahead and go back into MetaStock. We use the intermediate term trend a little bit differently than we use the primary and short-term trend, and I'll cover that as well. So we'll go ahead and kind of switch back into MetaStock. What we've got here, we're going to go back to these two sets of indicators. So this blue indicator is actually, Thomas, to answer your question, it is the intermediate term trend. We don't use it in exactly the same way that we use the short-term and the long-term trend. Okay, and the reason that it's a little bit different is what we're looking for with the intermediate term trend is we're looking to do what Rahul calls a shift of momentum or a shift of strength or a shift of focus. Okay, so what will happen right here is if you're looking at the long-term or the short-term trend and comparing it to the medium-term trend, right here you have a very visible crossover in momentum. Okay, this is a shift of momentum, and in the case of the shorter term becoming more bullish than the longer term, or the intermediate term is what I should say to be specific, what you're going to get painted on the bar is you're going to get painted a bullish change of momentum, and that'll show up as an indicator on your chart. So right here you get your buy arrow as soon as that shift in momentum happens. So if you have a shift of momentum to the downside like you did right here, there is a crossover, you'll notice a sell arrow is painted in the bar, and we just recently had a buy signal that painted on the bar for Apple because of that shift of momentum to the bullish side the very next day. So that's how we use the intermediate term trend. We don't use it to, we don't care if it's actually bullish or bearish. We're looking at it from a term of momentum to see how it's different. Okay. Steve asked a question, are you recording today's session? We are, Steve. I'm glad you want to watch it again. What we'll do, because I messed up on the GoToWebinar side and I didn't share the screen for so long, is I'll actually email you a copy of the YouTube recording, which should be good. So there you go. In any case, all right, so let's talk a little bit about how this works. What I'm going to do is we can't look at any of the signals that have happened just recently on the bar. But what I'm going to do is we'll kind of go in and kind of look at this area of time where it went bullish to bearish, or from bearish to bullish. This was back in, what is this? July 9th of last year. And we'll kind of go through the trade example, and I'll kind of show you how to move stops and that kind of stuff. And then we'll look at kind of how the trades worked out from there. It's the easiest way I've found to kind of show you the rules and that kind of stuff. So we'll go ahead and kind of come in here. I'm going to go ahead and zoom in a bit on the screen, okay? And we'll go ahead and back it up just a little bit so we can kind of see the history. So if we were following Apple back in July, we came in and looked at a chart on July 9th, you'll notice right here, it just went from kind of a bearish trend to a bullish trend long term, okay? The very next day it went from a bearish trend short term to a bullish trend. And the very same day, we actually had that change of momentum, which painted the bar. So everything is actually going to be right there for us, okay? So everything's kind of matched up. It matches with Rahul's rules in terms of looking at the trend long-term, the short-term trend. We have a trigger. We have that momentum shift. Everything looks good for this trade. Rahul wants us to do one more thing before we actually buy it. And that's to get an additional confirmation that the stock is going to move up, that it's not a false signal. And the way that he does that is he actually puts a line on the chart to identify exactly where he's going to go long on that trade. And so the way he does that, I'm going to grab my horizontal line tool here in MetaStock. I'm going to look, this is the day that we're looking to go ahead, where everything lines up. I'm going to look at the high for that bar and the high for the previous bar. And I'm going to go ahead and place a vertical line right above that line, above the higher of those two highs. Okay, this is going to be my entry point. So if this horizontal line that I've put at 191 gets penetrated, that's when I'm going to buy the security. We want a little bit of a confirmation that we didn't just set a high and the bears are going to come back in. It's an additional confirmation that's going to actually save you money, and it'll keep you out of some really bad trades. The other thing Rahul wants to do is he wants you to be able to have a stop loss, okay? Because money management is so important with trading, what we want to be able to do is identify exactly where we're going to get out of this chart, out of this stock, if it doesn't go in our favor. And so to do that, we do exactly the same rule. There's actually a couple of different variations that Rahul kind of teaches when he's talking about stop losses. I'll show you both of them and I'll tell you which one I prefer. So if I grab my horizontal line tool, and if I look at the low of this price, and I look at the low the day before, I could put an initial stop below the lower of those two values, okay? In this case, I put my stop below this low because this low is lower than this low, and I'll just put it right there, okay? That's one of the ways, and you can play with that as a way. The way I've preferred to use it over the years is what I'll look for is what is called a pivot low, okay? And I'll put my stop loss below that pivot low. So in case you're not familiar with what a pivot low is, what I'm looking for is a low that's surrounded by two higher lows. And I'm looking for the most recent pivot low that is on the chart. Okay? So if I look at right here real quickly, this low looks slightly lower than this low, and it looks slightly lower than this low. So this would be a pivot low. We're looking for a lower low surrounded by two higher lows. Okay? And in that case, I put my stop loss right here beneath that pivot low. Okay, if you don't like the way that one looks because these lows are really close to each other, you could also go with this bar here because it's a little bit more distinct. This is a little bit of this is also a pivot low. Okay, so before I get into this trade, before I'm actually invested in this trade, I'm going to know exactly what price I'm going to get into it, and more importantly, I'm going to know exactly what price I'm going to get out. I don't know if you've ever bought a stock without an idea of when you're going to get out before, but it's not a really good idea to make a decision about that while you're losing money, if you know what I mean. You know, you just end up buying something, you think it's going to go up the next day, it doesn't. You think it's going to go up the following day, it doesn't. You think it's going to go up the following day, and you're trying to make a decision, okay, well, where am I actually going to pull the parachute cord on this? By knowing where we're going to get in, before we actually place a trade, we're going to have a good idea of not only exactly where that's going to be, which will help us with our discipline. The other thing that's going to help us with is with our risk-reward analysis. Because if I know that I'm going to get in at this stock as close as I can to 191.62, and it might gap up a little bit, it might gap down, I might be able to get in exactly at that price, but it might open above it overnight, and I still decide I want to get in. I know I'm going to get in at pretty close to 191.62. Okay, if I know that, and I know my exit price is going to, and again, it could gap down below the exit price too, right? But I know that I'm going to get out at 182. That's about 3 points on a $200-ish stock. I know exactly what my game plan is before I get into that stock. I'm not trying to make up the rules as I'm invested in the stock, which is always a bad idea. So in any case, and the other thing is if it gaps up way really high overnight, I can make a decision based on what my risk-reward scenario looks like. Okay, well, instead of getting it at 182, I'm getting it at 200. Do I really want to take this trade? My stop loss is way down at 192. It's a decision that you can make a good decision around because you know what that risk-reward is going to look like. Okay? All right, so here we put that vertical line on the chart. The next day, it might have penetrated it. This is our entry price. It definitely penetrated it right here. So I'm going to say that we got in on this bar. And I'm going to say that we were able to get our price, or pretty close to our 191 price. So 191 is where we got into the price. I'm going to go ahead and kind of make a note of that so I don't forget it later mostly. So 191 is that initial entry price, .62. Okay. And our stop loss is going to be right here. If I hover over it, it'll tell me the value of that 182. Okay. So here I buy into the position. It kind of goes sideways for a while. I don't know if that happens to you guys ever. We get a bit of a pullback. You notice we have a bit of a change of momentum right here. Okay, So that change of momentum again is because we're losing momentum and it looks like it might be shifting from the bulls to the bears. That's why we get this sell signal. Now we're not going to pull the shoot yet, but if we get this sell signal and then things start to deteriorate worse, like we get in an RMO bearish trend or we get in a short-term bearish trend, then we'll get out of the trade when all three of those go against us. But we're fairly protected. When we get this sell signal on the chart, what we're going to do is we're going to wait, because a lot of times the market will move up and down in steps. It goes up a little bit, the sellers come in, the profit takers come in, they pull it back down a little bit, and then the buyers come back in, and the market never moves in a vertical line. Well, that's not true. There's been lots of examples, but most of the time it moves in a kind of a bit of a stair-step pattern. So in this case, we get the sell signal. It only kind of pops in there one day. Apple opens up really strong. The next day, we're already in that long position, and we get that shift of momentum back in the direction, which paints this buy arrow on the chart. Okay. Now, there's some very specific rules that Rahul has when you're in a long trade, and you get another arrow in the same direction. Okay, when you get that momentum shift, and it has to do a little bit with those stair steps. But in addition to that, if you wanted to buy more stock at this particular time, you could. I don't prefer to. I buy usually, when I'm doing this, I usually buy as many as I'm going to buy at the initial entry point. But you can buy more. He says that's fine. The one thing that isn't optional is he wants you to move your stop, because if we've moved up a little bit, we've come down, the sellers and the profit takers have come in and pulled that price down and established a new support level, and now the price looks like it's going to go up. We have a new support level. What we want to be able to do is we want to be able to move up our stop and lock in some of those profits beneath that support level. So in the case of this particular move right here, again, what I'm going to look for is simply a pivot low. So I look for that low that's surrounded by two higher lows, and I'm just going to put a vertical line right below that pivot low. Okay, so here we've got the pivot low, we've got our two higher lows, and I'm going to put it, and I'd like to see just a little bit of white space under that, so I might drag it down just a little bit on the chart so I can see a little bit of white space. So now, I'm not really making any money in this trade, but I've got a new support level. I'm going to actually put my new support in at that zone. Okay, all right, so and then Apple starts to take off here. This is where it really starts to look good. So we'll go ahead and we're happy it's making money. Here we get that shift of momentum to the downside. Here we get, but again, when this shift of the momentum comes down, you'll get that signal. As long as you're bullish long-term and you're bullish short-term, as long as those match out, we're going to go ahead and stay in this trade. Okay? But what we're going to watch for is that shift of momentum to the top side. Okay? And that happens right here on this bar. Right here, okay? So what I'm going to do at this point is I'm just going to move my stop up. So again, I'm going to be looking for one of those pivot low values. Here we had a low. This one looks like it qualifies. We have a lower low here, and it's surrounded by two higher lows. These lows might be the same value, but I think if I kind of looked at the data window here, 219.76, 219.75, this one was actually a little bit lower. So my pivot low is actually going to be right here that I'm going to use. So we'll go ahead and put a stop loss right there, okay? And now, instead of risking money, what I'm doing is I'm protecting profit. So the whole thing about trend trading is you're never going to get in at the exact bottom. You're never going to get out at the exact top. What we want to be able to do is find really good trading opportunities that are with stocks that are trending. We want to be able to take good chunks of that trend. Okay, Robert Deal is a guy that did a lot of talking with us back before he retired, and there was a saying that he had that was one of my favorite sayings of all time. He said, "Bears will make money, bulls will make money, but pigs will get slaughtered." We're not looking to identify the exact entry point and the exact high and the exact low. What we want to do is we want to find a nice trendy stock and find good ways to get into that and take good chunks of that trend, and good ways to make sure that we have a profitable business plan around trading it. And that's why I like showing this thing so much. Okay, so let's here we've got our stop loss in place. Okay, here we get that sell signal. Okay, so we had that shift of momentum that we're talking about up here, plotted the sell signal on the chart for us. Okay, A few days later, we stopped out. We probably stopped out right here on this day, okay? And so we would have opened. We would have gotten out on the open here. We would have gotten out at 214.52. So on this particular trade, we got in at what was it, 192? 191. We got out at 216. We made some pretty good percentages on that trade, okay? Let's kind of go in and we'll just play with the example a little bit more to kind of show you what happens when we kind of start to change trend. So we've had one really good trade that lasted several weeks off of this, and Apple has been a little bit, I remember when I started showing RMO, people would be like, well, you could just buy Apple, it's going to go up forever. Well, stocks don't go up forever. So let's kind of talk a little bit about when the trend changes and kind of how that is. We're out of the market here on, I believe it was this bar. So you'll notice that it kind of goes sideways for a while. We don't get any shifts in momentum. Here we start to get a little bit of a sideways action, but we're not participating in any of this sideways action. What we want to do is identify when the trend starts to get real weak or when it starts to get strong again, and that's when we want to buy. So we have the shift of momentum. We have a little bit of a momentum shift short term here. It's not really until November of that same year that we actually start to get a bearish primary trend. Okay, so right here on the chart, this is exactly where everything lines up for us. Okay, right here on the chart. I'm just going to kind of delete that. I wanted to be really specific about where I was putting that line, but right here is where everything kind of goes in our is giving us weakness. Okay, and now to take a short position, I'm going to use the exact same rules. I'm just going to reverse them. So I'd be looking to go short if Apple went down below the low of this bar. This is where everything went against us. And I'd be looking to put in a stop loss against a pivot high, okay? And looking at the highs, I'd say this one is pretty close to being a pivot high, but this one is definitely a pivot high. So again, I'm just gonna put a line on the chart right here, okay? This is my entry price is going to be 201.61. I'm gonna go short if it goes down below that value. I'm gonna put a stop loss in the chart of 223. So right now, my risk reward is based on support and resistance. It's based on what the chart activity. It's not based on how much I can afford to lose. But if this is too expensive for me, this is about a 10% loss. If I was going to take this trade, I can make that decision on whether or not I want to actually do it based on where my stop actually is. And I'm not trying to make that decision on the fly again. Okay. So let's say, go ahead and say we did structure this trade. The next morning it opens and we get in pretty close to the open at 199. Okay, so I'm going to write that on here on the chart so I don't forget it later. 199. Okay, that would be our entry price. Because again, we can't get in if it gaps overnight. If people aren't buying it at this price, we'd have to get in where we can get in, right? So we'll say we can get in at the open. Okay, the stock continues to move down. In this case, we're looking at Apple. You have that shift in momentum right here. Okay. Again, it's a temporary thing. We're bearish long term, we're bearish short term. So when we get this shift of momentum, we just start to pay attention to see if it's going to change direction. It doesn't. It continues to go down. We get another sell signal, and again, following our rules, we can either buy more short positions, okay, and it's not optional, we're going to move our stop, okay? And again, I'm going to move it above this pivot high. Pivot high is the opposite of a pivot low. You're looking for a high surrounded by two lower highs. So this is going to be our closest one here. So now I'm going to go ahead and say, okay, well, if we go above this particular level on the chart, I'm wrong. I'm going to go ahead and get out of the trade, but keep my profits at 186. Okay? And we just rinse and repeat. So here we have the shift of momentum. We move, the very next day it tells us we're going to go ahead and go short again. Okay, we can go ahead and short more, but we have to move our stop. That pivot high is the same day that we had that shift of momentum. Just going to put my stop right there. Okay, and I end up getting out. We probably would have gotten out. It did gap up a little bit overnight, so we didn't get out at exactly what our profit was saying we should. We didn't get exactly out at our stop loss. We would have gotten out at the open-ish at about 163. So right there, we've got 163.20. Okay. I just made another pretty good trade. We went from 199 to 163. This isn't sexy. It's not incredibly difficult. It's kind of a little bit boring when you start going through these trading examples, but trading's not supposed to be sexy. It's not supposed to be that exciting. You're supposed to use solid money management techniques when you're doing it. So, so far this year, we probably would have entered in, just to kind of wrap up this part of it. If we're looking at it kind of so far this year, let's just go ahead and do it. Everything would have went bullish right here. Everything lines up here. So right here is where we would have put in an entry price. Okay. We would have went in and triggered into that entry price. We would have just barely moved up our stop loss, and we're still bullish. We're still in this trade. We're still bullish long term and short term. It's kind of trending up, so as long as it continues to do that, we're going to go ahead and stay in the trade. So we got about 20 minutes left, but that was a chart you provided. Let's look at kind of very quickly, in a much more quick manner. Let's look at some of the other charts that we promised to look at. Samir says, please send me a copy of the video since I joined in the middle. Well, welcome. I'm glad you joined. I'll make sure to send you a copy of the video. Okay. All right. I'm going to go ahead and let's go back to the window view that we started in right here. And we won't go through them trade by trade. But from a broad level, I would just want to kind of just get an idea of how these stocks that you provided are looking. So if we just look here, and I'm only going to do this, I'm definitely not going to do it trade by trade, but I want to show you where the trends changed here on the chart. Okay. Last year from about June to about, let's call it January of this year, and we've had a massive downtrend in the market. It dropped, in this particular instrument, it dropped from 51 during that short-term trend to a low of 25. It halved in value. Okay, it's been trending up a little bit. Okay, it ended up going bullish at about 34. But my argument is if you're just looking at short positions and managing your stops in a very smart manner all the way down this move, it would have been better than trying to take long positions in the middle of it. So even just looking at that primary trend and trading in conjunction with just the primary trend is going to put the odds in your favor. Now, I'm sure if we actually looked at this, we'd actually pull, again, good chunks of that trend all the way down. Let's look at the other one. So this is Wynn Resorts, okay? And we'll look at that from a long-term view as well. And we're just going to do the same thing. It was bearish from right about here, long-term again, 176, all the way down to, at the low, 92. Again, it's a stock that almost halved in value, okay? It wouldn't have went bullish again until 113. My argument here is if you're only looking to take short positions while the stock's going straight down, it's going to be beneficial for you, right? This last little bit of trading, we had a little bit of, we would have taken a trade and lost a little bit of money here, okay? Right now, we're bearish on Wynn. Unless that changes, unless we start to see some strength in it, we're anticipating downside based on the RMO. So in any case, again, one of the things I like to show in MetaStock, the reason I like to show it to you again is it's very, very simple to use. I'm going to show you now how to get a trial offer in MetaStock, but this is something that you can use right out of the box. It's going to be very, very beneficial and helpful for you. And we had a comment a little bit earlier that it's just a trend following system. Well, that's the point. That's why it's such a cliche. You know, the trend is your friend. Befriend the trend. The reason I love to show this is it's objective. We're not trying to guess what the market is going to do. We're not looking at like whether the Feds are actually going to raise rates or lower rates. We're not hoping that Trump surprises us with a tweet on any of these stocks. What we're looking at is what are people doing? What is the actual trend? Are people accumulating the stock? Is it trending up? Or is it trending down? Is it falling out of favor like Apple did for quite some time there, right? And by making those objective decisions, they're duplicatable, they're repeatable, and again, money management is such a key when you're actually doing it. I love this system. I love to show it to you because of the same reasons we outlined earlier. It's objective, it's simple, it incorporates that solid money management. So I do want to be very, very specific though. It's a very small part of MetaStock. MetaStock's a toolbox we've been developing since like 1982-ish. You know, it's a hugely well-established program. There has been a reason it's been rated #1 in its price category every single year for the last 25 years. It can help you scan for stocks. We didn't talk about that as much. If we didn't have any trading opportunities today, we could run scans for the RMO and find stocks that actually match up to that. Okay, you can test trading ideas. We have one of the best system testers available in the market. I could go on for 30 minutes about why. We've got the forecasting, we've got the real-time alerts, the commentary and signals, and all of that starts at about $59 a month with data. And I'm going to talk a little bit more about that. With MetaStock, there's really two options. We have what we call our MetaStock RT option, which is our real-time option. The MetaStock real-time option basically is $250 a month. The daily charts option would be the basically $59 a month. Okay, that includes the data that you need. In the case of real time, it includes an institutional quality newsfeed, which is I've been training my sales team on it for the last 3 weeks. I think I have another 3 weeks to go on it. It's a massive, great tool that compares with let's say a Bloomberg or something like that. It's a very institutional quality feed. With either of these options, we're going to give you what we call our Unleash the Power of MetaStock. In it, there's some training on doing this RMO system and how to apply the RMO system. We actually have what we call a white glove installation call, where somebody will call you and help you get everything installed and running. They'll spend about up to an hour or two with you to actually kind of help you walk through everything and make sure everything is installed and running. We're also going to give you, and I think I mentioned this earlier, but I want to talk a little bit more about it, our Unleash the Power of MetaStock. That's an online course you can go through. I believe there's about 10 or 12 videos that you can go through, and it's going to walk you through how the system tester works, how to test trading ideas, how to see how well they work and perform on the stocks you're interested in. It's going to include information on how to do the scanner and that kind of stuff. I encourage you to give this a try because there's a reason it's been rated so highly. I wouldn't trade without it. Okay, what we're going to do for you is what we call a special offer, where we do basically an extended trial. So if you pay for the real-time service, if you pay $250, we'll give you 3 months of access. Okay, so you just pay for your first month. We give you your second and third month for free. If you pay $59 for the DC version, we'll give you your second and third month for free. That means for about $20 a month, you can try the software that's been rated #1 for 25 years in a row. I'd encourage you to try it. Again, I wouldn't trade without it. Again, I think there's a reason that it's been rated #1 every single year since 94. I'd have to go look. I'm not sure on that one. Anyway, to take advantage of this, give us a call at 800-882-3040 or visit us online at metastock.com/saleschat. I see a couple questions coming in. Mud has quite a bit of a comment, but you know what? I'd encourage you to try it. You know, there's a reason I show it to you on your symbols. It's worked. Many people love it. It's a great system. So, Johan, we'll make sure to send you the recorded video. Thanks for coming today. Sorry about that little mess up with the GoToWebinar. We're trying with some new technology today. In any case, guys, that's it for me today. I hope you enjoyed the class. Let me know if there's anything I can do for you personally. And happy trading. I'll see you at the next event.